Hello, everyone, and welcome. We're going to give folks just a few seconds to migrate in from the waiting room. Thank you for being here. All right, so let's get started. So good morning, everyone, and welcome to Be Prepared. A new employer mandate is coming, and it's brought to you by NJM Insurance and Integris. I'm Wayne Staub, and I'm with the New Jersey Business and Industry Association, and so excited to be able to offer this opportunity to our members. And with us today is James O'Donoghue from BCG Securities. I do want to just do a few housekeeping matters before we get started. So today's webinar is being recorded, and we will be emailing you tomorrow along with the PowerPoint slides, so be on the lookout for that. I'd also like to draw your attention to the chat feature. James would be happy to take your questions, so get them in there as they come to you via the chat box. If you have any trouble viewing or hearing during this presentation, don't forget you will automatically be receiving a recording within 24 hours along with the PowerPoint slide. So you have to sign out and watch the recording. You won't miss a thing. So now, without further ado, so excited to introduce James and to offer this opportunity to our members, and also to let you know that NJBIA participates in this program as well. And we're super excited to have James with us here to talk about it. So James, why don't you take us away?
Great, thanks, Wayne. So as Wayne mentioned, my name is James O'Donoghue. I'm a financial advisor and a chartered retirement plan specialist. I run dozens and dozens and dozens of plans throughout New Jersey, retirement programs throughout the country as well, but I really focus on the New Jersey employer, the small to mid-sized business in New Jersey. So I'm very well aware of what's going on in the retirement plan space. The New Jersey Secure Choice Act has come up a lot because the state of New Jersey hasn't done a great job of following up and letting folks know the rules and stipulations of this program. So I'm going to take some time, walk you through the outline of the program, the New Jersey Secure Choice, along with the option that you have available as NJBIA members to not only stay in compliance with the new mandate, but to do so in a cost-effective and fiduciarily responsible way to take as much work and stress away from you and take part of the main benefit that you have as being an NJBIA member. So bear with me here. I'll go ahead and share my screen, and we'll discuss the New Jersey Secure Choice Retirement Act. And again, as Wayne mentioned, feel free to ask any questions in the chat. At the end of the presentation, I'll go through any questions that you have, and hopefully, you'll leave here a lot more informed with a better understanding of what to do to move forward. So this mandate does come into effect soon. It comes into effect in March. It's called the Requirement Plan Benefit. All right. So 2 years ago, legislation by Governor Murphy was passed requiring New Jersey Small Business Retirement Marketplace Act, requiring companies in New Jersey to offer a retirement plan benefit if they didn't already do so with those companies that had 25 or more employees. Now, it was supposed to go into effect last year in 2021, but due to COVID, they decided to push it back a year. So as of right now, this still goes into effect by the end of March of 2022. So if you meet a specific requirement as a business and you do not offer any retirement program, you will be required to do so. So who is affected? What are those mandates? Who's required? As I mentioned, if you have 25 or more employees during the past calendar year, you have to offer a retirement plan. All right. This mandate is done by several states across the country, many of them out west, Oregon, Washington, California. And more states are taking on this mandate to require companies and small businesses especially to offer a retirement plan. So if you've been in the business the last 2 years and you currently do not have a retirement plan, if you don't offer a 401k or 403b, you're going to be subject to this new regulation. And you don't have to be a for-profit business. Non-for-profits still count. You still have to offer a retirement program. All right, so those are the 4 points that if your company has to fall into, you will be required to offer a retirement plan. So if you do not offer a retirement plan, there are penalties right? So to encourage folks to offer the plan, the penalties are actually higher than the cost of running a plan to begin with. So you're going to get a written warning from the government if you do not offer a retirement plan. If you make it to the second year and you haven't started one, you're going to have a penalty of $100 per employee. If that still doesn't encourage you to do so, the following year it's $250 employee. And after that, after year 5, you'll be charged $500 per employee per year as a penalty. Now, the cost to run and operate a 401k plan is well under $100 an employee. So it's much more cost effective to just start a 401k plan and give that benefit to your employees than it would be to wait. All right, I'll also touch on, as a business owner, you get significant cost breaks and credits to start a retirement plan. Up to $4,000 in tax credits by starting a retirement plan. That's more than the cost of starting and running a plan. So it's financially beneficial for you to start a plan anyway as a business owner, because you can offer your employees a great benefit, and essentially the costs are mitigated for the first few years to run the plan with tax credits and benefits. So what are your options? You do realize that you fall under that regulation. You're going to have to offer a plan. What options do you have? So the first option is New Jersey is going to come out with their own state-run retirement plan offer. There has not been any guidance, frankly, on what the plan is going to look like. The state was supposed to announce a board of directors who are going to mandate the rules for the plan. The fees are listed on there, so maximum fees that you'll be charged in the plan, which are, quite high for a startup plan. But other than that, they have given no real guidance as to what their plan is going to look like. So that should tell you probably not the best option to wait for the state to come out with a plan in the last minute and have them run your retirement plan for you, right? Your other option is you can start a 401k, a 403b through many of the financial service providers out there, right? So Principal, Fidelity, Transamerica, most financial services firms offer 401k offerings. Many of the financial firms that you've heard of, Merrill Lynch, Morgan Stanley, Goldman Sachs, they don't offer retirement plans unless you have at least $5 million in there. So that doesn't really help a lot of these startup plans with 25 employees who are looking to start a program. So there are only a few companies that will offer startup 401k plan services for you. Right? And finally, and this is where I'll spend the most time on today, is to walk through the NJBIA retirement program, Retirement Advantage Program. Right? So this is an option. It's a 401k that you set up and design specifically for however you want it set up for your business. But it combines the resources of all of the NJBIA members to get a much better quality product for you and your employees. And I'll touch on what makes that so great in just a minute here. So this was created 5 years ago now through the Employers Association of New Jersey. They decided that a lot of the struggles that small businesses were having was, first off, healthcare, right? Healthcare costs were getting very high. They were going up every year. And as a small business, you didn't have the option to self-insure. So you had to go through these large insurance companies that were very expensive. So what they did was combine the resources of all of their members. They then used those resources and were able to get a much better product individually. So they decided to do the same thing with the 401k plan. If you were to set up a 401k plan individually, you would face much higher costs generally, not as great service because you are a startup plan with not too many assets in there. The fees would be much higher to make it worth it for those companies to start up the cost. And you would be liable with all aspects of running the plan as the business owner, right? So you had to make sure the funds in there were the lowest cost. You had to make sure you were providing education. You had to make sure your 5500s were getting filed. You had to make sure your audit was getting done. So it's a lot of work to run a 401k plan. So this was created to help reduce all of those stresses and the work it takes and fees to run a retirement plan for a small business. Right? It's managed by NJBIA and EANJ, both nonprofits. and you can fully customize the plan exactly as you want it. All right. So when they went out and looked at 24 different companies to partner with to start this, they decided to partner with us at Benefit Consultants Group to help set it up. So it's custom designed specifically for NJBIA and EANJ members. Small businesses, you're already paying the membership fee annually. That allows you to enter a multiple employer plan, which is what this is. And I'll touch on each of the benefits more specifically, but again, it reduces your costs significantly, right? You do not have to file a 5500 at the end of the year. It gets done by the overall plan. You don't have to buy fidelity bond insurance every year. It provides, again, economy of scale pricing. You're getting the group benefit cost of having a $100 million plan, even though you're just starting up. And best-in-class education for your employees and investment selections. So because we are fiduciaries on the plan, not only on the investment side, but on the administrative side, we have to act solely what's in the best interest of the employees that are participating in the plan and the plans. All right. So the main goal is to eliminate, like I said, a lot of the daily tasks it takes to run a 401k plan. And there are two types of fiduciary protection on 401k plans. One covers the administrative side. It's called 316 fiduciary. And the other covers all investment selections, options, and that's called 338 fiduciary. So the 316 fiduciary covers a bulk of the administrative tasks it takes to run a plan. We make the plan disclosures are sent directly to the employees. Full fiduciary responsibilities are set forth in all the plan documents. We take care of all government filings, audit 5500, transaction processing, loan processing, distribution processing, just allowing you to continue to run your business as normal, but now you're offering this great benefit at a much lower cost. And the 338 fiduciary, that covers all investment selections, options, transfers, and replacements of funds. So we have the ability to look at the 18,000 different mutual funds that are offered in retirement plans. We go through a stringent process. Every quarter, we meet with the board of trustees to overview all of the funds offered. We use a third-party rating agency called Morningstar, where we go through and they grade out all of the different funds available. And then we can narrow down the funds to offer, quite frankly, what are the best possible options for you and your employees to invest in. We also include Vanguard funds as well as an option for every employee. That way, if their main goal is to keep costs as low as possible, they can simply choose the Vanguard funds as well. And we take full responsibility for selecting and monitoring all the plan investments. So I'll give you an example of this happened last year. T. Rowe Price has a great fund offering. We've been using it for a few years. They came out with a new share class, which is slightly less expensive. So instead of 54 basis points, they have a new offering at 41 basis points. It's our responsibility to catch that and to now offer the less expensive option. It is a full-time job to make sure you're monitoring and making sure all the funds offered are for the best benefit of the employees. All right. This does come with every plan that signs up, no matter the size, the cost, how much money you have in the plan, startup, et cetera. You have a financial advisor dedicated to your plan. Whether it's myself or one of my colleagues, we're fiduciary financial advisors. Again, meaning we can offer specific advice and guidance to your employees on which investment funds to choose, how much they should save, should they increase their contributions every year, what should they do with their old retirement accounts. Only 2% of 401k plans in the US have a fiduciary advisor attached to them. And those are generally set up for very large plans. You have this benefit with no matter the size of your plan because you are a member of NJBIA. Okay, so typically we'll do a group enrollment meeting with all of your employees. We'll do 2 or 3 or on Zoom or in person, whatever's convenient for you. And then we'll set up a time where we can meet with each individual employee one-on-one if they choose to do so we can walk through the enrollment process with them. We can educate them and tell them where they should save, what's their best options, how much they should be putting away. And we also offer financial planning services. We're a financial planning firm. That's what fiduciary advisors do. The general fee we charge for a full financial plan for a family ranges between $750 to $1,200. But part of the deal we struck with EANJ and NJBIA was that if you are a member and you participate in this multiple employer plan, we will offer those financial planning services to your employees at no cost. So if you decide to go this program, not only do you give your employees the benefit of now having access to a retirement plan, they have access to a fiduciary financial advisor who can help set them up for financial success in all aspects of their savings life. So the cost benefits, this is what comes up a lot, right? So as business owners, you're always looking at the bottom line. I'll just highlight some of the big cost savings and walk through a real life example. So it eliminates all audit costs, right? So I'm sure many of you on here have smaller companies under 100 employees. If you have 100 employees or more every year, you're required to get audited every year. The average cost is between $8,000 and $15,000 a year. Okay, that goes away if you're part of a multiple employer plan. We pay that. All right, it's combined between all of the members in the program, so each individually you do not have to pay for them. You don't have to pay for fidelity bond insurance. It's only like $400 a year, but you have to remember to do it to stay compliant, and it's still a few $100s to your bottom line, the cost to running a plan. Lowest internal investment expenses available. This means that each fund offered is offered at institutional share price. So generally when you need $1 million, a minimum investment in one particular fund to get institutional share pricing, the same prices that institutions do, you don't need that as part of the MEP because combined, we're well above any threshold. So your employees can get the lowest possible cost on any of the funds offered or investment options offered. Very competitive administrative costs. A lot of the human resources work that's required in terms of notices, filings, 5500s, et cetera, is eliminated. So that frees up time for your HR. And the plan costs on average are in the bottom 10% of plan benchmarks. So every year there's a book called 401k Book of Averages. It gets every 401k in the country, breaks down all their costs. So we are in the bottom 10% of costs, but we provide probably the top 5% of service, top 1% of service by all the additional benefits you're allowed and you gain by having a fiduciary advisor on the program. So this is just this is what the fee comparison would look like, or it looked like for a plan I did with NJBIA a few months ago. We looked at their traditional, what they were paying at their current firm, the costs, the administrative fees, the advisory fees, and then I added the fidelity bond insurance, audit, and HR time. So this is for a larger company, 120 employees with $2 million in the plan. You then compared it to the EANJ and NJBIA program, and the costs are about half. That's generally what I see. When we do cost comparisons, we're about half the overall cost, whether that's a startup or that is a plan that's been around for a little while. I will touch on the exact costs. So for example, if you have 25 employees and they're all active and they're all going to be eligible for the 401k plan. All right, so 25 employees, the annual cost for your program, you may want to write this down, is going to be $2,125. So the way the fees work, it's $85 for each eligible employee that you have per year. Again, part of this program is complete transparency. We do not hide costs in the funds. Everything is straightforward, right? And again, you do get about a $4,000 tax credit for starting a retirement plan, which covers the first few years of expenses. All right. So just to summarize the benefits of the NJBIA program, fiduciary protection is a very large one. Right? You don't want to take on all the liability to run a 401k plan, especially a lot of smaller companies that don't have CFOs or a finance department to help run it and take on that liability. Best in class investment options. We offer everything: American Funds, T. Rowe Price, Vanguard, MFS, JP Morgan, the best of the best in terms of funds. The majority of administrative tasks are removed, right? 5,500 filings, all that stuff is done. It's done for you. And lowest internal investment expenses available: no fidelity bond insurance, no audit fees, and financial advisory services are provided. Okay. So the next steps is there's a lot of information available for you directly through the NJBIA website. So you can go to njbia.org, which I'm sure many of you are on frequently. And you can request the booklet, right? An e-booklet that outlines all the benefits of the plan we discussed. You can also reach out to me directly and we can do a fee comparison across the board. I can show you, okay, you want to look at what New Jersey's thing might cost you. You want to look at this program, or you want to look at Principal, Fidelity, or whoever. I can run a benchmark report for all 3 or 4 programs to show you the cost differences between them. And my contact information is here. So that's the direct line to my office. That's my email address. So don't hesitate to reach out to me with any questions that you might have. All right. And I'll be happy to review anything or any questions that you have and walk through all the benefits of the program directly, specifically for your company. All right.
Great. Thanks, James. We do have a couple questions here, and I do also, again, want to say, we as a business utilize this program, and the education, individual education that James was discussing. I personally had it, so I know how valuable it was to me as I'm getting closer to my retirement age. It seems to be even more important. So having the ability to talk to James was very significant for me. Let's start with some of the questions that we have. So the first question we have, James, is how is 25 employees defined? Is it 25 plus employees per pay cycle, full-time employees, etc.? Can you drill down on that a little bit?
Yeah, so the law states that if you had 25 employees during the past calendar year, so through 2021, if you had 25 or more employees, you are subject to this law. And I will state, this is the first time that New Jersey is doing this. Many other states have already enacted this, okay? But I believe New Jersey will follow what the other states have done, which is they'll mandate it for 50 employees, and then a year later they go down to 25 employees, and then a year later they go down to 15 employees, and now some states have 10 employees. So my assumption is that this year the law says 25 employees over the last calendar year. So if you fall at 22 or 23, my assumption is over the next year or two you'll fall under this regulation, because they will lower the employee count.
And
But
James,
right now,
full-time employees, is that defined, or does that matter?
yeah, full-time employees are 1,000 hours a year. 1,000 hours a year or more dictates what a full-time employee is. But again, as I mentioned, and we talked about, how vague the state has been with this requirement, they don't specify anything beyond 25 employees over the past calendar year. They have not rolled out additional information. I read through the whole Retirement Act. All it says is 25 employees during the last calendar year, you'll be required to offer this plan.
Great. Does an IRA count as a qualified retirement plan?
That's a great question, and I believe the answer is yes, because the New Jersey program, it has to be a company-sponsored, payroll-deducted IRA plan, right? So it can't be just IRAs individually that your employees have. It has to be set up through the employer. So you have to offer a SEP IRA or a simple IRA offered to your employees, and I believe that's what New Jersey plan is looking to do. So the answer is yes, but it has to be employer-sponsored, such as a SEP or a simple IRA, not just individual employees having their own retirement accounts on the side.
Great, great, thank you. So another question, being part of the MEP, do we all follow the same eligibility rules? For example, our current plan is a safe harbor and doesn't kick in until 1 year of employment.
That's a great question. The answer to that is no. You customize the plan and set it up exactly as you want. You can have a safe harbor plan. You can make eligibility at 21 years old. You have to work there for a year, or 18 years old and you're eligible the day you start at the company. You can offer matching. You can have different vesting schedules. You can offer the plan and customize it exactly as you want. That's the benefit of this MEP versus a lot of other MEPs. These are all your individual 401k plans. The only part of being in the MEP is that because you're a member of NJBIA, your fees are lower and the administrative tasks are covered, but you still have complete flexibility to design the plan exactly as you want.
Great. James, if I have 20 employees, do I need to do anything right now?
No, right now you do not need to do anything. But as I mentioned, my assumption is in a year or two, they're going to lower the limit to 15 like every other state has done.
Yeah, we follow that nationally as well. We've seen that it's come down in other states. Even New York, I believe, now is down to 15 employees, if I'm not mistaken. And you said this does go into effect this March, right? As the rule is currently written.
As the rule states, this goes into effect March. That's correct. Yeah, you'll get written notification or penalty if you don't qualify. But it goes into effect this March, and then you'll have a few months of grace period. But you have to have the plan up and running by the end of the year for sure.
Approximately, James, how many funds are offered, and do you provide a list of these funds?
That's a great question. I will share my screen right now, and I will show you the funds offered. So this is the current fund lineup. It's more extensive than your average fund lineup. We do make changes, throughout the year, as if a fund falls below a certain Morningstar rating and it's not in the top 1 percentile any longer, we take a look at it. But these are the funds, and these are their returns over the past 1 year, 3 year, 5 year, 10 year, along with their expense ratios. All right. So again, very transparent. So you have Vanguard options offered in all categories. You have target date funds, which are now required to be offered in all retirement plans. And then you have all different segments of the market. So large cap, mid cap, small cap, international, fixed income, straight allocation funds, our stable value fund, which pays about 3% in a money market. And then you have your target date funds here as well. As you can see, the performance has been great and we have that option because we offer the best possible funds. That's all we do. So if you want a copy of that list directly, just reach out to me and I can email that over to you. Again, we're fully transparent with everything. So that's the fund offering, and I can send that over to you if you like.
Thank you, James. So if we can customize plans and put in a waiting period, then the administrative fee per eligible employee would not include those in the waiting period time?
That's correct, yeah. So if you have, for example, 30 employees, right? And you now have to offer a retirement plan, but you offer a 401k plan and you make eligibility 21 years old and you have to work there for a full year. But you with your 30 employees, only 20 of them are eligible for the plan. You're only charged the administrative fee for the 20 that are eligible. So you're still required to offer a plan because you have 30 employees, but you're only paying for those 20 employees that are eligible because you have a few employees that are not 21, or you have a bunch of employees that you have a high turnover that leave within a year. So you're only paying the administrative fee for the employees that are eligible to participate in the plan.
Great. Okay, so do companies who already offer a retirement plan have to implement auto enrollment at 3% for all new hires as of March 20th as part of this act? And then there is a follow-up question, but I'll let you answer that first.
That's a great question. So as of right now, no, automatic enrollment is not going to be required as it's starting in March. They very strongly were encouraging folks to do it. They give you an extra $1,500 in tax credit by adding automatic enrollment to your plan. It's going to be a national law. That's not part of the New Jersey law. It's part of the national secure choice law, is the requirement for automatic enrollment. And for those of you who don't know, automatic enrollment simply means your employees, once they're eligible, they're automatically enrolled in the plan, as opposed to what happens today for a lot of plans is they're automatically not in the plan unless they enroll. So the opposite is everyone's enrolled, they do not have to participate. They can opt out, they check a box and sign a form. I'm not in the 401k plan, that's fine. But the default moving forward is going to be everybody who participates is automatically enrolled. As of right now, that's not part of the New Jersey Secure Choice Act that's going to take place in March. That's a federal Secure Choice Act that has not announced a date of when they're starting that. But to encourage folks to do it anyway, they give you a $1,500 tax credit. Again, it's not a deduction, it's a credit. You get that money back to offer automatic enrollment.
Great.
And the effective date is March 28th, 2022. That's right.
It is March 28th. Okay.
Yep, that's what it currently states.
Great. Does anybody else have a question? These were great questions. Appreciate it. We know when it goes into effect. If you have a minute or two, what are the differences in the federal law? Like, are there things in addition we're going to have to worry about moving forward?
That's a great question. That automatic enrollment is the main difference. New Jersey tries to stay ahead, like a lot of other states. New Jersey tries to stay ahead of what the federal mandates are going to be and to implement them quicker, because they realize that again, this is all a benefit for the employees. That's really why all these laws and mandates are coming into account. They recognize there is a severe retirement savings crisis in this country. The average 50-year-old has under $50,000 saved for retirement. That's not enough for retirement. Pensions are not a thing anymore. So all of these rules are meant to encourage folks to save and give employees the option to save for retirement. So the only real difference that will affect folks in the federal law is that automatic enrollment requirement. Now, I do see a question on the credit, the federal credit. So the $1,500 credit is a federal credit. Yes, it's federal tax credit. You could just Google IRS benefits for starting retirement plan, and it lists all of the benefits. So when I mentioned the $4,000 credit, that combines that $1,500 credit for starting a plan. So you get a $2,500 credit for starting a program. You can get an additional $1,500 by offering automatic enrollment. So that's where that $4,000 came from. That is an IRS federal credit. It's not a state credit. And then once, it's also deductible. Any fees that you pay to run a retirement plan for your employees, they're deductible expenses as well. So if you have 20 employees,
Minimum.
Yes. So that's a great question. So there are two different minimums required for force out. So if an employee leaves the company, they have less than $1,000 in their 401k, we then send them a letter, a notice that you have 60 days. Here are all of your options. You have your 401k. If you do nothing, we're going to mail you a check. All right. And you can force out those employees. You take them off your books as a business owner. You're not administering them or their plan or anything like that. If you have over $1,000, but under $5,000, you can also force those employees out as well. The only difference is they get the letter, they get the notice, here are your options. If they have over 1,000, but under 5,000, we don't mail them a check. We automatically transfer their account to a money market IRA account. That way they're not subject to the taxes. And from that IRA, they can do whatever they wish. They can roll it to their next 401k, to an IRA that they monitor themselves. But yes, you can force out essentially any employee who no longer works for you with under $5,000.
And someone just asked, can you say the effective date again?
March
'Cause
28th.
March 28th, 2022.
That's right. They are going to give you a grace period. That's when the law goes into effect. But you will have a grace period to start the plan before they start mailing out notices that you're non-compliant.
Any other questions? James, great job. I mean, this is complicated stuff, and you
It
really
is.
did a great job of getting it to understandable pieces for me anyway, and I appreciate that.
It's my pleasure.
So we will just see if again any other questions.
I'll share my screen again, just so you have my contact information. If you want to write it down, that's my direct office line, my email, and I'll be happy to answer any specific questions that you may have individually.
And also, as I mentioned at the beginning of the webinar, we will be sending out the audio of this, which includes all the questions and also the PowerPoint that James has provided. So you will have that information available to you.
Great.
So thank you. I know we do plan to do another one as we get closer to March. But you know, as far as the timing perspective to do some of this, are there, you know, how quickly can one get up and going with the plan?
It's a great question. Typically, if you're a startup plan, anywhere from 4 to 6 weeks is the general timeline to get a plan up and running. But if you start the plan process before the end of March, you'll be covered under the program. I do see another question. If the would the employer incur the cost of setup and yearly administrative fee? So for most startup plans, the answer is yes, right? Because there are no assets in the plan to help pay the fees. So what I've seen, which is quite common, is the administrator of the company would pay for that annual $2,000 administrative fee and the $500 one-time startup fee from the company for a few years. But once the plan grows and you get up to $1 million or somewhat in the plan, you can always defer the fees and have the plan assets pay for the fee, so the company is not writing the check. So you can determine however you want to pay the fees as the company, or do you want the fees to come out of plan assets?
James, we got another question. If we already offer a plan, do we need to extend eligibility requirements to include all employees?
No. Nope. Your eligibility requirements are set by federal law of what the maximum eligibility requirements can be, and that's 21 years old at the latest, and 1 year of service with an eligibility entrance point semi-annually. That's the maximum. You do not need to change your eligibility requirements with this law. I see another question about the tax benefits your company will receive by doing this.
Oh, I'm sorry, I missed that one. Thank you.
Yeah, I touched on that earlier. So you do receive a tax credit for starting a 401k plan. You also receive additional tax credits for setting up automatic enrollment. And then, of course, all fees that you spend as a business to run the program are tax deductible. So essentially, with most of these startup plans, the first 2 years of expenses are credited back to you. And then after that, the fees are deductible for tax purposes. And I see if there's not a plan in place, do you need to offer to all employees? No. You still set up the eligibility requirement however you see fit as a company. As long as you offer the 401k plan, it does not have to be eligible for every employee.
And how do you handle 401k data submission per payroll?
That is a very good question. And because it's determined by who the payroll provider is. So there are some companies and larger payroll providers that we have something called integration with, 360 or 180 integration, where if an employee makes a change either on their payroll side or through their BCG benefits website where they can see their account and their balance and make changes, it's automatically linked to the payroll company. So that's the ideal situation as a business owner on your part. right? It's all just done automatically. If you do not have full integration, and it's a smaller payroll company, then you would just submit it through an Excel file right through the website every payroll cycle. And generally, the first time you do it, we have someone on the BCG team walks you through it, screen shares, shows you how to submit it, sets everything up for the first time. It takes about 10 minutes, but each additional payroll submission after that should only take you 1 or 2 minutes every other week to upload the file.
So just before we get to the next question, shameless plug, NJBIA, one of the benefits, another benefit we offer is a discount through payroll processor Prime Point. So that's another plan that something that you could look into as a benefit of membership with NJBIA.
And we do have integration with Prime Point, so it works all around. Yep.
Right. So that's very good, and we appreciate that. Confirming a 4013B plan meets the new law.
Correct. Yes. If you have a 403B plan, you satisfy the requirement. You do not need to start a 401k.
Okay. And if we already have a plan and figure out it's worth it to move over, would the tax credits be available as part of the transfer process?
No. The tax credit is for starting up a plan. So if you already started a plan, you do not receive the tax credit. If you transfer over and then implement automatic enrollment, you will receive that tax credit, the $1,500 credit you receive for starting automatic enrollment. But you do not get you don't get the startup tax credit by transferring the account over.
Okay. Can you list some of the payroll companies that you are fully integrated with?
I mean, there are hundreds of payroll companies. So off the top of my head,
From the big ones, ADP.
Yeah, so you mentioned Prime Point's big in New Jersey, Prime Pay. I know they're working with Paylocity. They're probably the largest. Paychecks, I believe. But I'll have to confirm with BCG on the administrative side which payroll companies they have integration with. And there's different types of integration. So I wouldn't be the best to answer that question, but I can certainly reach out to me and let me know your payroll company, and I can find the answer to that.
That's what I was going to say. So if somebody has a question about their individual company that they're currently using, they can just email you that, and you'll let them know whether they are.
Yep. And I'll find out. And then we can, if there's interest, we can always have. I can look to the administrator to have them add or partner with that payroll company to provide integration.
All right. All right. Well, I'm waiting another minute or two to see if anyone else has another question or two they want to send in. Again, this has been very helpful, James. Rules are changing fast and furious, and with everything that's going on in the COVID world and everything, it's important that we keep these things front of mind before they become an issue. We're excited about our partnership with you and with BCG. It's been great so far. And the companies that have come over have been excited about the plan as well. So, at this point, it doesn't look like there's any more questions. Again, just as a reminder, you will be sent a recording that has the PowerPoint, all of James's contact information. As James mentioned, you can find information on our website, which also can tell you about the payroll savings we have with Prime Point, which could add another value and savings to a move to this plan. With that, it looks like we're going to turn it over. So until next time, again, just want to thank you, James, for doing this and helping us try to meet a need for our members who have expressed this to us through the years. So we're super excited about this opportunity.
Great. Thanks for having me. And yeah, I mean, you're already paying for NJBIA membership. This is a massive benefit. So take advantage. That's why they're there.
Yep. All right, everybody. Thank you again, Wayne Staub, NJBIA. Happy to have you here. Hopefully this provides you with some information that could help your business. And we'll look forward to seeing all of you soon. Thank you.
Thank you.